the country will come back. You know, it'll go through a big recession and everything, but it'll come back, and it's coming back. So don't ever worry about America. It'll tell you, you're in the right place. The lessons are that people will continue to make the same mistakes they've made. I mean, humans, and it doesn't correlate to IQ particularly. I mean, when they get greedy, and we had this huge bubble in the most important asset the American public has, housing. I mean, so you had a huge bubble in something you could borrow heavily against. So you could run a margin account, in effect, on a house instead of stocks, and the conditions got very lax. And so when that bubble popped, but people came into that gradually. When they get fearful, it happens all at once. I mean, when people get scared, they all want to leave at one time. And we had them all want to leave at one time, and that'll happen again. It'll happen with a different set of circumstances, but the human animal will keep behaving pretty much the way it has in the past. So we will have periodic recessions. We'll have an occasional panic, which doesn't all recessions don't come from panics, but just look at where we are now. I mean, the country really works. The trick is, I mean, it seems to me the obligation of a society as prosperous as ours is to figure out how nobody gets left too far behind. System working. But you will have periodic recessions, and you will have an occasional panic brought on by something that who knows where it comes from. You know, the thing to remember at that time, I wrote an op-ed piece in the New York Times in the fall of 2008, and I said, you know, that the country will come back. You know, it'll go through a big recession and everything, but it'll come back, and it's coming back. So don't ever worry about America. It'll tell you, you're in the right place. Well, I bought a book in 1949 by a fellow named Ben Graham called The Intelligent Investor. I don't remember what I paid, but aside from what I paid for my 2 marriage licenses, that was the best investment I ever made. It's very important to have the right framework. You need to have an approach to investing that's sound. And Graham's approach is simple, but some people adopt to it, and which I did immediately, and most people don't. But if you have the right philosophy, you will find opportunities as you go through the next 20, 30, 40, 50 years. And frankly, you're most likely to find them when in periods like 5 years ago when we were having the panic. I mean, stocks sell at silly prices from time to time. Most stocks at one time or another sell at very silly prices. And it doesn't take a high IQ to figure out that they're cheap, but it does take a temperament that's willing to step up and actually act. I tell people, if they're going in the investment business, if you got 160 IQ, sell 30 points to somebody else because you won't need it. I mean, I figured out very early, you don't have to be that smart in this business, which is fortunate, but you do have to have the right temperament. And you have to be able to ignore what other people are saying and simply look at the facts and decide, is this stock which is selling at X worth 2X? And things like that. And when you don't find them, you don't do anything. Right? You don't have to be right about thousands and thousands and thousands of companies. You only have to be right about a couple. I met Bill Gates on July 5th, and Bill said, you've got to have a computer. And I said, why? And he said, well, you can do your income tax on it. I said, I don't have any income. Berkshire doesn't pay a dividend. He said, well, you can keep track of your portfolio. And I said, I only have one stock. I said, and he says, it's going to change everything. And I said, well, will it change whether people chew gum? And he said, well, probably not. And I said, well, will it change what kind of gum they chew? And not. And I said, well, then I'll stick to chewing gum and you stick to computers, you know. I don't have to understand all kinds of business. There's all kinds of business I don't understand. But there's thousands of opportunities there. I did understand the Bank of America, you know, and I'll be able. I'm able to do that. I'm able to understand pitch and miss, so I can wait there and look at thousands of companies day after day, and only when I see something I understand and when I like the price at which it's selling, Then if I swing, if I hit it, fine. If I miss it, it's a strike. But it's an enormously advantageous game. And it's a terrible mistake to think you have to have an opinion on everything. You only have to have an opinion on a few things. In fact, I've told students, if when they got out of school, they got a punch card with 20 punches on it, and that's all the investment decisions they got to make in their entire life, they would get very rich because they would think very hard about each one. And you don't need 20 right decisions to get very rich. 4 or 5 will probably do it over time. So I don't worry too much about the things I don't understand. If you understand some of these businesses that are coming along and can spot things on, if you can spot on Amazon, for example, I mean, it's a tremendous accomplishment what Jeff Bezos has done. And I tip my hat to him. He's a wonderful businessman. He's a good guy too. But could I have anticipated that he would be the success and 10 others wouldn't be? I'm not good enough to do that. But fortunately, I don't have to. I don't have to form an opinion on Amazon. And I did form an opinion on the Bank of America, and I formed an opinion on Coca-Cola. I mean, Coca-Cola's been around since 1886. There's 1.8 billion 8-ounce servings of Coca-Cola products sold every day. So those are the kind of decisions I like to make. And you may have an entirely different field of expertise than I would have, probably much more up to date in terms of the kind of businesses that we're seeing evolve. And you can get very rich if you just understand a few of them and understand their future. But fortunately, I don't have to. I mean, if we go into Heinz, and I look at people pouring ketchup on, hamburgers and potatoes, I don't think it's going to change. And the nice thing about it, some products travel, some products don't travel. Candy bars don't travel well. I mean, if you look at the Cadbury bars in England, they don't sell well here. And if you look at the Hershey bars here, they don't sell as well someplace else. Soft drinks travel and ketchup travels. I like products. And if you look at what happened in September and October of 2008, there were some extraordinary things done. The Federal Reserve poured $85 billion into AIG, and if they hadn't, our world would be very different. Hank Paulson guaranteed money market funds at a time when 30 million Americans with money market funds were panicking, and when gone out of the non-government money market funds, 125 of it gone back into the government. 300 billion, that was almost equal to the deposits of Wells Fargo or Wachovia at the time, which were then two separate institutions. Both of those authorities have essentially been taken. I don't think they can do that under Dodd-Frank. I don't think that Bernanke could do what he did, and I don't think that Paulson can do what he did. When there's a panic, the only thing that will stop it, basically, is when somebody who has the ability and the will says, I'm going to do whatever it takes. And basically, that's what Bernanke and Paulson, and finally, Congress in a kind of a reluctant way, but said to the American public. And you could believe it. If Bernanke said, I'm going to do whatever it takes, nobody knows what Section 13.3 of the Federal Reserve Act is, and it wasn't probably meant to do what he did with it, but he did it. And the same way with they call it the Exchange Stabilization Fund of the Treasury. It was enacted back in 1990, it would be used to take care of money market funds. But you had these strong characters who had the ability to print money in the case of Bernanke, and they said, we're going to do whatever it takes, and the president was behind them. That is the way you end a real panic. And I worry actually that Congress doesn't like to give anybody that much authority, and it bothers them that the Fed has all this authority, or that Paulson acted as he did in TARP. And I tip my hat to them, and I'm not sure. There will be another panic. Where it comes from, who knows? But when that time comes, the question will be, are the people who have panicked, who have frozen, who have caused the economic engine to stop, will they believe and come right back and be doing something? And I'm not sure whether what's been enacted is a plus or a minus in that regard. Regardless, the country will come through, but it's very hard to write regulations that will keep people from acting foolishly, particularly when acting foolishly has been proven very profitable over the preceding few years. It's just the way it works.